In the month of November, I made $1,686.87 trading a mixture of stocks, crypto, and I believe we have a few metals in there. Maybe not. Maybe it was just crypto and stocks, Bitcoin and stocks. That said, let's do a full month recap. Overall, there were 15 trades. Really, there were less because most of those were duplicated. If I trade a stock position, which were most of these trades, that was taken on two different accounts, so it calls it two different trades. One on the $10,000 account and one on a $25,000 account. So the sizing, I should start with that. The sizing for all of these trades, the $10,000 account, I risk no more than $100 per trade. And the 25K account, I risk no more than $250 per trade. And that goes for all of the accounts. Well, I guess that's how I risk. It's the same percentages across any size. Now I only really have a 25K futures, I guess, or metals account. And then I have the stock accounts, the 25K stock and the 10K stock. So if I ever have a Bitcoin trade, I trade it on the 25K account. If I ever have a gold trade, same thing. Futures trade, boom. And then futures, S&P, NASDAQ, and the Dow. So overall, this is a pretty good month. It was coming off the back of, if we jump back to last month, it came off the back of, I believe, let's see what last month's numbers were. The biggest red month of the year, which was last month, we lost a little bit over $1,300. And it's funny because we go back and have, what I think is probably one of the larger months, if not the largest month of the year, dollar-wise, the month after that. This just goes to show, in my opinion, in my view, this just goes to show like the reality. You know what I mean? Like the reality of trading, the reality of the market, the reality of how things work. Last month, I think we definitely noticed that things were not working nearly as good as they had been. And I thought maybe the election was to blame. I think it was possible that the election was to blame. And it's funny that the election goes through. And then just after that, we have a lot more clean price action. Now, we had some losers in there, don't get me wrong, but we had a lot more winners. And we had a 66% win rate. So literally hitting on 2/3 of our trades. But again, right, like that's, winning on 10, losing on 5. But if you go back to last month, let's just rein you in here. Last month, I won 7, lost 19. So it's like, this is, in my view, like reality slapped right on the screen. Like, this is the reality of it. You don't win every trade. You don't win every day. You're going to have red days. You're going to have red weeks. You're going to have red months. I mean, you are. You're going to have it. So it's like you can tell yourself that I shouldn't. You can get pissed. You can get this. The problem is that what I've come to realize is that, like, especially as you broaden the time frames out and you just trade more bigger picture time frames, like, obviously not everything's going to work. And so I could be in a trade I'm in it for 2 weeks, and that's the only position I have, maybe. And sometimes, well, more often than not, there's going to be something that pops up more often than that. But I could be in it for a week or two, and then it loses. And I'm like, oh, fuck, my last 2 weeks I lost. Yeah, because it was one trade. Broad in the sample size. That is like, if you've watched the recaps, if you watch the monthly recaps, if that is not clear by now, shoulders pop. If that's not clear by now, I don't know what is. You're seeing it live. Like, you're literally seeing it live. And then next month, we'll do a December recap, but also a yearly recap. Probably 2 separate videos. So that's that. Average win-loss 1.5. Not amazing, but that's also not a ton of, not a lot of trades here. So not a lot of losses, not a lot of winners. So that's that. But also, hey, a 1.5 with an average win rate there, you're good. You're chilling. 1.5 with a 45% win rate is profitable, by the way, believe it or not. So you could be profitable and that's actually my averages, I believe, for closer to the entirety of the year. My average is around a 1.5 average win loss, and my average winner or my win rate is around 45%. And I believe that is almost exactly my stats for the year. But I'll recap the year stats in the next month's video. So let's get into the details. I'm going to go into the reports. And we'll kind of go from there. I'm going to pop off the screen because I have done in the past many times where I've covered this up. So what's the most important stuff to take away from here? Nothing crazy. We had some fees in there. Nothing crazy. Some swap fees. We have profit. Largest profit was 421. Largest loss 216. Good, risk reward. Average hold time was 6 days, 17 hours. So you can see my average hold time was about a week. About a week on average holding all of these positions, believe it or not. So there's that. And let's see, can we consecutive? How many consecutive wins? Consecutive wins, 6 wins in a row, 2 losses in a row. Nothing crazy else there. Okay, that's the deal. Let's go to trade duration, trade time. Not really needed, to be honest with you. Let's go to the instruments. That's what's more important. That's more fun. So we made the most money on Walmart, OKE, which is an oil and gas play. Netflix had a huge move. Bitcoin had a couple trades there. And then BX, Blackstone, lost on the NASDAQ on a day trade, I believe. Lost on gold or silver. I don't even know. Is that gold? I think that's gold. Maybe it's silver. I don't even know. XAG, I should know the periodic table by now. I don't know the periodic table. XAG, that's gold or silver. One of them. Tesla, 238 loss in that. That was a recent trade. That was actually the most recent trade. You can go back and watch that recap if you want to. But that's it. I think that's it. Yeah. So there really weren't a lot of things going on. Bitcoin we traded the most. We traded 3 times. I traded Bitcoin 3 times. I believe I had, we can find it here. We had 2 wins, 1 loss. The total profits were $630.31, and then I had a $200 loss, so it netted me out to around $232 on Bitcoin. Interesting. So that's the deal there. Let's see, going through, now we get into the setups, mistakes, and then custom tags. So most of the trades, as you can probably tell, we played bull flags. Market's going up. I play the bull flag break. Essentially, it is a horizontal consolidation break. I'll throw in sometimes a trend line on that, but it's not something I've done very, very often. It just depends upon the situation and setup. I've found that I have all the data on this. I'm more consistent here, so I'm going to keep doing what I've done, even though I might see some situations where I'm like, that does look really good, because even though it's not the perfect bull flag break, it's whether it's a wedge or maybe it's a downtrend break, but it's in more of a bull flag pattern. You know what I mean? That's where it gets a little bit more, not wishy-washy, but I just don't have the data on that. And so over time, I'll eventually have it, but I stick to what I know works. You know what I mean? So that's really what I focus on. Mistakes. I don't want to say that I had a perfect month, because I did not, but there really weren't many things here that I had to mark down and say, yo, we didn't do this right. To be honest, if I can do this month again and again and again, I would, and I would just continue to do that. And I'm happy with that. It's just, that's the situation. You can go back to individual trade recaps to see more about some things where I kind of question things. It's not really mistakes necessarily. It's more of I question, is there merit in trying this or trying this little tweak or that tweak because of XYZ? But then I always come back to saying, dude, you're going to go move. If you move the needle this way, you're going to be pulling from something else most likely. So if you make more money, or if you increase your average win percentage or your average win rate, okay, I win for 35% of the time. Well, you're gonna need to make a lot more on your winners than your losers to make that profitable. Well, what if I win 60% of the time, or if I win 70%, 80%? Well, if you're winning 80% of the time, the reality is that you're probably gonna be taking a hit on your average win loss. So your average winner might not be as big as you used to have it compared to your average loser. You're gonna be pulling from one to give to the other. It's kind of, and then it evens it out anyway, right? So time frames of choice here. We crushed on the daily time frame. That was it. Mostly swing trades on the 1 day time frame, meaning these are daily charts I'm looking at. We break out on the daily and go for it. That made me almost $1,900. I literally didn't lose on a daily time frame breakout, which is kind of crazy when I think back to it. We lost on a couple of 3 trades on the 4-hour time frame, lost on all of those, believe it or not, which 4-hour had been doing well prior. Weekly time frame, we netted approximately $152 in profits. Not much. The 1-hour time frame, we also traded twice, and that one netted me $85 in profits. Again, 50% win rate across the 1-hour time frame and the 1 week time frame, but coming out with profits there, I'm happy with that. If you can win half the time but net profits, I mean, in my book, you're doing pretty good. And that's in my book. Maybe not in your book, but that's in my book. I think you're doing pretty good. Also, to speak on this too, the game plan becomes, or going forward, as I talk about, the game plan becomes scaling it up. I will talk more about this in the yearly recap, because you will see it very, very clear. So right behind me, right here, you have the net daily P&L. if you go back, when I go back in the yearly recap video end of next month, what you'll see is you'll see these bars, but you'll see them across the entire year. So like all of my days that I've traded on the entirety of the year. But what you'll notice is that they're much smaller at the beginning of the year and they've gotten much larger. Now, the problem that you have, or not the problem, but they can get larger, but if you're not profitable, then it's not going to help you. Or if you're break even, not going to help you. So getting larger is great, but you ideally want to be consistently running around the same numbers you've been doing. And so that is what I'll talk more about, and the potential, or the, I guess, scaling potential with that, and then the plans going forward behind that. But I will say that the scaling approach may kind of go down. There's two different avenues, and I'll speak on this really quickly now. The first avenue is going with the prop firm route and then buying larger accounts, hopefully getting funded, and then passing those accounts and then using that to be able to make myself a lot more money faster. But at the same time, like, it's going to take you a couple of months to pass the challenges. That's what I found. It's taken me months, I don't pass the challenges in a couple of weeks. I don't trade that often, A. And B, based on how I size, I've never lost a prop firm challenge. I plan to keep it that way. Why would I become more aggressive, go through a red streak, as I've had many times, and then potentially lose the account and have to buy it again? It's like, I don't want to do that. Or if I like, for example, on the account that I'm funded on, why would I want to run the risk of losing that? You know what I'm saying? Like, I got it funded. I do not want to lose that by being aggressive and trading with a larger size than I need to. So where if I go into a 5 in a row losing streak, which is possible, I had, I think, 9 or 8 or 9 was the peak losing streak this year. If I have that, will that blow my account? Most likely for people who trade prop firms, yes. For the vast majority of how people trade them. But if you're a little more conservative, then you can be fine. It's just that looking back, I made a mistake of going with the smaller accounts because of what happened to me with the prop firm that went down. Speaking about prop firms going down, by no means do I have a lot of faith in this industry going forward. I've been seeing a lot of stuff talking about potential regulations and all these different things, because what may be going on, and this is, some minor research / little rumblings, little rustlings of the leaves I've been hearing in the prop firm space, into 2025, we may start seeing a bigger crackdown of regulations, because what's happening is you are essentially trading a paper trading account. And then if you make money, they'll pay you out once you pass the funded phase, all these different things. They'll pay you out. But the reality is that is seen potentially by the government as gambling. And if you're gambling, there's higher taxes to potentially be paid. There are larger costs and fees associated with that. Very profitable industry if run correctly, as many of us maybe have seen in the gambling world. All these different betting sites, ESPN Bet Now, you got Prize Picks, all these things. They make a fuck ton of money, but it also costs them a lot of money to run their companies. The reality is that so many people lose money, it's okay. And I think in the prop firm space, that is the same reality. It's just how you manage and compete with each other, and then how you manage price points to keep yourself afloat, to have cash to pay out traders when you're playing this game. So I think the good ones will be okay, but there will be a lot of sketchy ones that don't make it. And if we start seeing more regulations, like these are kind of gambling companies, because it's kind of what it is, because you're not trading real money. So if those things start to occur, these go under this. I'm already seeing it in changing of the rules. Certain prop firms, you can't swing trade. You can't hold for more than 24 hours in certain things. If the rules get bent to the point where it's like, okay, I know for example, Bitcoin for me, over the past year, Bitcoin has actually been a very nice contributor to my P&L. I've done very well on it. But almost all my Bitcoin trades are held for more than 24 hours. If I'm no longer able on these accounts, these prop firms, to trade Bitcoin for over 24 hours, well, I will have to just stop, go to use my own money, and do it separately on my own, because I don't want those restrictions. So if we start seeing those restrictions that eat away into what I do in my strategy, I will have to move on from them and just go with my own money. The reasoning why I haven't got my own money is because I am paying off $200,000 of student loan debt, and I figured, why not pay down my debt as much as I possibly can initially, all lump sum, well, not all lump sum, but put a lump sum down from cash I had, which I have done, and then any extra money I have, pay it down, versus tie up thousands and thousands of dollars that I could have used to pay down the 6.5% interest debt. So that's why I go the prop firm route. If I no longer see that as a viable option, I'll happily move on. I've used a good amount of this time to pay that down to the point where it's at a much more comfortable level, and so I'll be fine. But that is my situation. Everyone has a different situation. Not to mention, you have potentially, there's other perks there too. So, once the negatives outweigh the positives, then, you got to make the move. And I think that it would improve my numbers because there'd be less fees potentially, a couple other things, maybe some more opportunities, more different asset classes to trade, better, there's better spreads. I think that there's reasons to lean towards your own funds, but the prop firm space in my view was always a means to your own account. It was never meant to be forever. So that's that. I'll talk more about that as things develop. That's the situation where it is, either way. Does that really change my trading? No. Same shit happens. If I'm going to win, I'm going to win. If I'm going to lose, I'm going to lose. Is a 10-cent spread, a 20-cent spread going to matter that much? No, it's not. But, could add up $20 on every trade, could add up over the course of, 100 trades, 200 trades. It's decent money that adds up on this sizing. Maybe that's even more money as I size up. So that's the reality. All to be said, all that kind of boiled down is if the prop firm space, if I still see the path, we'll roll. If I no longer see the path, I may need to temporarily size down while I rebuild my own accounts with my own money. Start small, and then each month, take a portion of my income, put it in, build the account, profits hopefully as well, and just kind of inch my way back up to the sizing that I've been trading with. And that's the plan. So hope that made some sense. If you are still watching this video and you are looking at TradeZilla right here, they have a massive Black Friday deal. If you're watching this right when it comes out, great. It's up there. Go take advantage of it. If you're not watching this after, then maybe it passed. It's okay. Next year, there'll be another sale. But there's a discount code below this video. TC10, I believe, saves you 10%. Or they have a Black Friday sale. Either way, I will leave a link below. And it is an affiliate link, so I get a commission. I think it's like 30%. It's not very big. Only for 12 months. So if you use it, great. I appreciate you. If you're still here, I appreciate you. And here is to December, which we hopefully will have another amazing month. Peace. See you next time.